Today, tackling the mortgage rate apathy tax. Hello again, it's Martin North from Digital Finance Analytics. Welcome to the latest post covering finance and property news with a distinctively Australian flavour. Mortgage rates and what's going to happen and how to take advantage of them is a really important question at the moment. And I'm very pleased today to introduce you to the CEO of Joust. Hi, Carl. Thanks for coming on.
Hi, Martin. How are you?
Really good to have you on the show. And you've got a really interesting business and business model, and it's all centred on the question of getting the best mortgage rate. So can you introduce yourself, but also talk a little bit about the nature of the business and how you think about it?
Sure. Look, I'm Carl Hammerschmidt. I'm the CEO for Joust. Joust has been operating for about 4 or 5 years now, and I guess the way I would describe it is it's a consumer hero brand for those who want to shop for the best home loan for their particular needs. It's a classic two-sided marketplace. Consumers one side, lenders on the other, and it's designed to allow consumers to access the sharpest rates and the most suitable home loan products for their particular needs and their particular profiles. We've got two products or two platforms within our website. The first one is what we call Joust Live Auction. It's a classic reverse auction system. So consumer comes in, they enter 20 data points with regards to their home loan needs and with regards to their financial profile. They can then set their auction or their joust for between 1 and 3 days. And once it's in the system, lenders can then appraise those profile details and those profile data points, and then bid for the consumer based on that. So they can bid, with their comparison rates. They can bid with any other product features they have, and it works in exactly the same way as a reverse auction model would. At the end of the joust, after 1, 2, or 3 days, or at any time at all, a consumer can declare a winner. And at that point, the consumer and the lender are able to move towards application and settlement. It's a highly competitive, highly transparent, and I guess quite a novel way for consumers to take the power of the home loan path to purchase back into their own hands.
Well, let me pick up with the second business model a bit later, but this is a really important thing for people to understand, right? This reverse auction model does put the consumer very much in the driving seat, right? Because at the moment, if you think about it, most people will either go direct to bank sites or indeed go to a mortgage broker who indirectly goes to the banks, right? But you don't know whether you can get the best deals and the best rates through those processes. Yours is a very transparent process, isn't it?
Absolutely. Transparency is the key to it. Consumers are able to compare apples with apples. Consumers are able to understand immediately which home loan products they are eligible for based on the data points that they've entered and based on their profile. And they know that the lenders are leaning in for their business. The lenders are competing for their business. And so therefore, to win the business, they're going to have to offer discretionary pricing. They're going to have to offer product features. They're going to have to offer certain service levels. And in that environment, consumers are always guaranteed or often guaranteed for a much sharper rate and a much more suitable product for their particular needs.
Well, you and I have been talking, and I've been speaking with other people in the industry about the fact that many people are still on rates that are way higher than they need to be, right? I call it the apathy tax, and quite often it's because people think it's really tough to try and switch and it's tough to find the good rates. So again, yours is an example of a really good platform that allows that transparency to come through. I guess one of the questions is, how big is the lender panel of lenders that actually come in and provide effectively competition within your market?
So we've literally got thousands of different home loan products in the platform. They're offered by both brokers and direct lenders. We offer all of the big four, all of the major bank, all of the major non-bank lender products. We offer all of the, the new digital lending products as well. We see ourselves as an open marketplace, one which lenders and direct lenders and brokers can compete on an even playing field. So consumers can access the full range of products that are out there in the market, and because we've got a mix of lenders and brokers, they'll generally have access to a much broader range of products than they might otherwise going to direct lender or direct to one particular broker.
And I guess one of the interesting observations is you'll be seeing a lot of transactions coming through your platform. What are the insights that you can draw from that? What are the types of people looking for the loans, fixed and variable, big loans, little loans? What are you seeing?
So, look, I guess the average Joust customer is really a home loan around the $590,000 to $600,000 range. Average income of around $145,000 to $150,000. It is the majority Eastern Seaboard, Victoria, New South Wales, and Queensland, but that's obviously where 70 to 80% of the population lives. We do, and in the last couple of years, we've had a real high demand for refi. So refi has been anywhere between 60 to 80% of demand volume at any given time. First home buy has been I guess on the increase over the last 6 months because of some of the subsidies and some of the incentives that are out there, but it is predominantly refi, and I think that's been driven by as you alluded to before, the current record low interest rate environment that we've got, and also the amount of consumers out there that are realising that they're paying an apathy tax or paying a loyalty tax, and recognise that this is the time to move and that this is the time to lock in a potentially potentially record low rate over the next 2 to 3 years.
And of course, it's difficult to talk in general terms, but people are able to quite often get lower rates than where they're currently on.
So the consumer who refinances through Joust will, on average, save $3,500 a year on their mortgage repayments. So that's a significant saving on a monthly or an annualised basis, and that's generally on the average customer profiles that we're talking about. That's generally a rate reduction of 0.5% or more. And so, that latent demand that's out there in the market with regards to the amount of people sitting on the back books of the lenders who are paying too much, either through, apathy or inertia or, I guess a feeling that, it's a difficult and onerous process. That latent market, can really be tapped into through a platform like Joust.
Well, I see it again and again in my surveys that people are on very, very high rates, particularly those who transacted 2 or 3 years ago and haven't necessarily checked. But even those on more recent rates sometimes can get better. But of course, we have to be a little bit cautious here. Some of the fixed rates have exit fees and things attached to them. Now, when you come to thinking about the platform and the way it works, does it take account of the sort of the exit fees of the existing loan, or is that something beyond your platform?
So the platform doesn't do calculations based on exit fees and such. You're able to compare the loan products on all of the basic features and I guess the basic rates and cashback offers and so on. And obviously there are a lot of features and incentives in the market, such as cashback and the like at the moment. And consumers do need to be careful about, I guess, what presents good long-term value for them. But I guess the beauty of the Joust platform, it means that they're able to, as I said earlier, they're able to compare apples with apples. They're able to really, in a fast and simple way, understand exactly which loans are for them and fit their particular profile. Once they, and a consumer can declare, a couple of winners and move both of those conversations through to application and settlement, and that means that they can continue to drive that competitive process once they start to compare the exit fees, once they start to compare the cashback offers and so on.
And I think what's quite interesting here, this is, if you like, slightly upstream of doing a deal, right? It shows you what the market is and what the potential is. and then you, as you say, you can basically come up with a short list, and then you can go and prosecute further and pursue it. And I think that's pretty powerful and quite quick, right? So it doesn't necessarily take a lot of time to put the data in and let the thing run. And just one other question, there's no impact on your customer's credit rating or anything, right, through asking the question in the auction?
Not at all. So we do a Equifax credit check on the consumer as they come through, so that I guess a lender can understand their profile better and offer them a much the most suitable products. However, it's a soft credit check, and it's one that doesn't affect anyone's credit rating or credit score or leave a record. So it's a frictionless process for a consumer, 5 to 10 minutes of onboarding. And as I said, you can run your auction anywhere between 1 to 3 days.
Right. And once you're in the system and you've sort of built your profile, are you able to rerun it later?
Yes, so consumers can run as many jousts as they like. If they I guess haven't come across an offer that they takes their fancy or that they think is competitive, they're able to run it again, and we're also able to, I guess, help them with what we refer to as a concierge service. If there's no one in the platform that's able to suit their particular needs, we're more than happy as a business to our customer success guys can take them offline and can work with a range of different suppliers and brokers and lenders that we work with to see if we can arrange something offline for them.
So I assume your business model then is based on referral fees, is that right?
Correct, yes. So free to use for consumer, and we charge the lender. So there's, I guess, it's a two-tiered fee. So the first fee is payable on the connection that's made between the consumer and the lender, and then the second fee is payable on settlement. So it's really a success-based model, and based on that, it incentivises good outcomes for both the supplier and also the consumer.
And thinking ahead, how you're reading the mortgage market at the moment, there is a higher CPI read yesterday. People now talking maybe about higher mortgage rates a little bit sooner than perhaps previously expected. So do you think that's going to change the trajectory of momentum on the platform?
I think that the property market will remain hot. I think once immigration opens back up, I think you start to see the overseas students coming back in. Even though people are paying record prices at the moment, it's only the highly leveraged that I think will be affected by the rate movements that may come in the next 12 months or so. I think, and it's my hope, and I think platforms like Joust should continue to educate consumers that that there is still that major cohort out there that are paying too much, and and that hopefully with the prospect of rising rates on the horizon, that consumers will be, I guess, incentivised to act on what they're currently on to be able to take advantage of this low rate environment as it currently exists. I think and that will mean that we have that continued pattern for refinance, that continued pattern for demand in the refi area.
It's interesting because I survey households all the time, and I ask a lot of questions about people on their current mortgages and whether they've tried to refinance. And the barriers that comes through in those surveys are quite interesting, right? The biggest barrier is, it's all too complicated, it's too hard, it's too difficult to do, right? This again proves, and I keep saying this on my channel, it's not that hard to find a better rate, right? If you just got to, take that first step. And sure, there are some processes behind the scenes in terms of ultimately applying and processing, but it's not that hard. And when you think about the savings that can be made, which are really quite substantial, and if you do come on for a lower rate, savings not just one-off, but for as long as you hold the mortgage, this is probably the easiest way of it relieving your budget.
Absolutely. For those savings that we were talking about before, for the average Joust customer, it ends up amortising out to, $60,000, $70,000, $80,000 over the life of the loan, and that it's considerable savings to be had. I mentioned before that we've got two products in the Joust platform. We also have, apart from the auction model, we also have another product called Joust Instant Match. The use case there is for a consumer that, and I guess this talks to how simple and easy it can be to understand what's out there that, in terms of loan products that will service your particular needs. The use case for Joust Instant Match is for a consumer that wants to instantly understand what's out there. They might just want to quickly do a scan of the market. They don't have the time to go into dozens of different rate tables and comparison sites and work out what they're eligible for or not. Our Joust Instant Match product is it provides them the ability to be able to understand immediately what's on the market that suits their needs. So once again, they'll enter 10 data points around their home loan needs and their financial profile. And then we'll run an algorithmic search in the background and instantly match them with up to three loan products that once again suit that particular loan profile that they've entered. It returns the results within seconds, and it returns them, as I said, up to three either broker or direct lender options that they can then immediately get in touch with to talk to. That's a process which is literally under 5 minutes, and something which gives you an immediate overview of what your potential savings could be.
Yeah, absolutely. Well, it just shows it's not that hard. And one last question here: can you do this from a mobile, as well as
absolutely
PC?
Yeah. Desktop, mobile? It's designed to be. I guess it's designed to meet the expectations of the new generations of millennial borrowers. They want transparency. They want immediacy, and they want to be able to transact through digital channels and through mobile channels. And that's that is now the greatest segment of the borrowing market. And being able to transact digitally, being able to provide transparency, and being able to provide on-demand service are really going to be hygiene factors for that audience going forward.
Yeah, and that was as well as one of the conversation to, in terms of the age ranges, right? Clearly, there are a lot of younger people who are very digitally comfortable. Right? I call them digital natives, right? But what about those who perhaps might be, slightly older, slightly less comfortable with digital, right? Is there still room for them on this platform too?
Look, absolutely. We actually have a very broad spread of demographics and age ranges using the platform. Having said that, I guess that millennial borrowing cohort has become the largest segment of the market. We still have a huge segment which you'd consider that traditional boomer or Gen X cohort. And I think the simplicity of the platform, the simple form-driven nature of it makes it accessible to a range of different cohorts across the age ranges.
Absolutely, and that's the thing I want to underscore to people, because again, in my surveys, I quite often see, what I call the digital migrants, or even the digital Luddites, saying, "Oh, I'm never going to go near that," right? But actually, it's not that hard. Again, and I just want to keep emphasising the fact that this is an easy way, if you've got a mortgage, to check whether you can save some money. And budgets are tight. This is just such a powerful tool.
Absolutely. Look, and Google research shows that 9 out of 10 Australians who are looking to refinance will start their journey online. The online journey, as I said before, can be slightly onerous. It can be, difficult to understand the different rate tables, to visit all the different comparison sites, to know where to start that particular journey. But when you've got the ability to be generated a range of products which are immediately transparent about how they suit your particular needs, it simplifies that path to purchase significantly.
Absolutely. Well, I really appreciate your time today. It's been a really interesting conversation. We'll put the links and things below, and maybe we can touch base down the track and see how things are developing in the mortgage industry.
Absolutely, Martin. Would love to talk in greater detail about what we're seeing in terms of market movement and market insights. But thanks very much for your time today.
Terrific. Thank you very much.